Good morning from our global headquarters in New York. I'm Manish Krani, back alongside Danny Berger. You're welcome to Bloomberg Brief. Let's set that agenda.
A coalition of the willing, UK Minister Keir Starmer and other European leaders demonstrate broad support for Ukraine after the clash at the White House with Trump. The Kremlin responds to Oval Office's breakdown, calling it unprecedented, showing how hard a settlement in Ukraine will be. In countdown to Tariff Tuesday, President Trump's levies on Canada, Mexico, and China are ready to take effect. Good morning, Manus.
Danny, a very good morning to you. Stocks rise this morning. That late rush to the market on Friday carries through. We have dropped for 2 straight weeks, so let's just see whether this holds. We flipped around from a loss on the year on Thursday. Goldman Sachs warned that there's manic headline roulette at play. Keep an eye on Bitcoin as well. Furious rally yesterday as the president announces a crypto reserve, including Bitcoin. Roll it over, have a look at the bond market. Strongest start of the year since 2020. Yields rise ever so slightly this morning. We've got this risk on in equities, but we're down 33 basis points in February, the biggest monthly gain since July. And we're down 50 basis points from the highs, Danny. And of course, that would be good news for Scott Bessent, won't it, in terms of the target? The target for the White House might be bonds over stocks.
He talked about that yet again over the weekend in an interview. Manus, we also have some individual stocks we're keeping an eye on. As a sector, European defensive stocks, you can see a big move across the board. BAE Systems, that's up 14% this morning. Rheinmetall, others surging on the implications of increased defense spending in Europe.
Keep an eye on MicroStrategy and other crypto stocks. President Donald Trump, as I just said, once again talked up the plan for strategic crypto reserve, naming Bitcoin later in the day, also recouping some of its losses.
And Morgan Stanley raising their recommendation for Chipotle. The firm's analysts saying that the stock is a buy, seeing it rise to $70. Those shares up 2.7% in the pre-market. The CEO of Chipotle also speaking to NBC in an interview over the weekend, saying that they plan to absorb increases in costs rather than passing them on to consumers.
And in just a few moments, Peter Kinsella will join us from Union Bancaire Privé, and later in the hour, Katrina, Dudley from Franklin Templeton, their view on the markets. Danny, good to be back with you. It's amazing how 8 days ago when I left you, we were talking about hot CPI, PPI, maybe even rate hikes, no rate cuts, and I come back to you, and we've completely shifted the vibe. I think that's what Laurie Calvasino was writing about, the shift in the vibes, and it has shifted quite dramatically.
Yeah, a shift in the vibes. I have to say multiple analysts using that type of language. Barclays, one of them this morning. And that's why the data is so important this week, Manus. We're going to get jobs on Friday. We've had a patch of soft data from the concerns over tariffs and government layoffs, consumer confidence taking a hit, consumer spending taking a hit. I've seen multiple people downgrade their GDP expectations. Atlanta Fed GDP tracker now also showing a negative reading for the first quarter.
I think it's interesting. Whoever you listen to, lots of people talk about the seasonality. And, you know, they front-ran the imports. That's why the Atlanta GDP was lower. But going back to the conversation you had with Julian Emanuel the last day that I was here, which was the emboldened Trump when equities are at record high on tariffs, it's a very different narrative today.
Yeah, well, look, Mag 7 has been really hurt, and you could make the argument that maybe that has nothing to do with Trump, that this would be a good environment for tech. But there is a lot of headline fatigue maybe creeping into markets, the latest of which, Ukraine's Volodymyr Zelenskiy has met with European leaders in London on Sunday, following Friday's tense meeting with President Trump in Washington. A U.S.-Ukraine minerals deal is now further away, but Zelenskiy says that he is willing to meet with Trump again if the U.S. president invites him to, quote, solve real problems. In the meantime, European leaders are fast-tracking efforts to improve their own defense capabilities. Here's the U.K. Prime Minister Keir Starmer speaking after the European Security Summit.
Not every nation will feel able to contribute, but that can't mean that we sit back. Instead, those willing will intensify planning now with real urgency. The UK is prepared to back this with boots on the ground and planes in the air. Together with others, Europe must do the heavy lifting.
Joining us now is Bloomberg's Oliver Crook, who is in London following those developments. Oliver, what is the latest?
Yeah, so listen, Danny, I mean, I think it's still many European leaders were sort of reeling from the shock of what they saw on Friday and what the sort of implications would be, not only for Ukraine, its future sovereignty and sort of how the war is going to go, but actually for the European continent. And I think that we heard some of that concern from Keir Starmer, from many of the leaders that met over the weekend to discuss basically what the next step is and what throughout this whole conflict we've had no shortage from the Europeans of very sort of strong rhetoric. The question is, how do you respond to it? Now what they've set up a meeting for later in this week, and there's sort of two sides of this. One is the thing that Keir Starmer had alluded to right there, the coalition of the willing. What does that mean? What security guarantees can basically the Europeans provide on their own to help reassure the United States and get U.S. backing? Though it's very hard to sort of imagine. I mean, I've spoken to a number of different leaders and lawmakers. When you talk to them about the possibility of having European troops on the ground in Ukraine, the question is, what function will they serve? Will they just be there to sort of observe that the conditions of peace remain, or are they going to be there to potentially return fire on Russian troops if that sort of ceasefire does not hold? These are some of the questions, and those are very difficult questions to answer, particularly if you do not know whether or not there is going to be security guarantees from the United States, and that is really at the heart of this debate. I mean, I spoke to the Norwegian Prime Minister a couple of days ago, and they're also talking about a new sort of architecture that's not just the EU, not just NATO, but something else. Have a listen.
Europe cannot complain its way to the negotiating table. It has to argue its case on substance and on process. And it would be easier if Europe spoke more with one voice. And Europe on Ukraine is not only EU. It is EU, it is UK, it is Norway, it's also Turkey.
So they're talking about fleshing out an architecture that involves non-EU states, Norway, UK, Turkey. Turkey, obviously, who's got one of the largest standing armies here in Europe. But it's interesting. I spoke to the Norwegian Prime Minister. I said, listen, well, then are you willing to tap the Norwegian Sovereign Wealth Fund, the biggest in the world, to help build out that sort of defense? This answer was, no, we're not really willing to go there. They're only going to hit about 2% this year. They share a border with Russia. I asked if he's willing to go further. He says, yes, maybe, but maybe not just right now. Again, this is sort of the concern here in Europe, that while there is a lot of urgency being expressed in very sort of colorful terms, the sort of concrete solutions are not there yet.
Oliver, good morning. We've had one of the first responses from the Kremlin. They talk about what happened in the Oval Office on Friday. What is their response so far?
Yeah, so listen, we've heard a number of different things. I mean, I think it's fair to say that overall they are fairly pleased with how the meeting went in the Oval Office between Volodymyr Zelenskiy and Donald Trump. I mean, we had heard other sort of messages from, one of the spokesmen, Peskov, talking that basically the Russian and the American views of how to kind of proceed are more or less more and more aligned. Again, these are the sorts of things that are high sort of concern from the Europeans. I think there were a number of Europeans, even some of the Ukrainians that I had spoken to ahead of Trump being elected, that were sort of not necessarily welcoming, but we're open to the idea that the Trump administration would take a much more pragmatic approach in terms of the reality on the ground and trying to get a deal over, but still sort of stay on the side of Ukraine. Those sort of expectations have been certainly shaken by what we saw on Friday. And again, at the end of the day, for the Europeans, they need to sort of appraise what is it that they can bring to the table for Donald Trump in order to have their voice heard and be a part of this architecture going forward. And that, manus to this day, is still not very clear.
Oliver, thank you very much. Oliver Crook, tracking the very latest headlines from London. Here in the United States, President Trump is on the verge of slapping a new 25% tariff on Canada and Mexico while doubling the levy on China. Now, the moves are scheduled to take place on Tuesday, and they would easily be among the most sweeping of the Trump era. Joining us now is Brendan Murray, who heads our global trade coverage for Bloomberg. The Commerce Secretary calls the situation fluid. Brendan, good morning to you. Scott Bessent actually talks about a coalition, perhaps, between Mexico, Canada, and the United States of America. Perhaps that is the off-ramp to full-scale tariffs. Good morning.
Yeah, exactly. I think what we can expect is a long day of phone calls between governments, between industry and their leaders, and to try to head off what would be, an escalation in the trade war with the U.S.'s three biggest trading partners. Scott Bessent, as you mentioned, called it what could a potential outcome, the creation of what he called a fortress North America. That's where Canada, Mexico, and the U.S. Throw up more import barriers to Chinese imports and what they see as a flood of Chinese products coming into all three countries. So we'll see how it all shakes out throughout the day. Commerce Secretary Howard Lutnick also left the window open to some sort of flexibility or some sort of deal between Canada and Mexico and the U.S. at least. So it sounds like there's we're going to head to the midnight deadline, with a potential for something to happen. But the window is open for the leadership to negotiate their way out of something like a full-scale trade war.
Right, Lutnick speaking on Fox News yesterday, saying that there will indeed be tariffs implemented, but the level of which is what he thrown into question. Brendan, we're also going to get China's NPC this weekend. And China has been one of those tariffs that have indeed been put on for all of the threats. Of course, this is an additional 10% one. But what kind of response are we seeing from China specifically, a nation that has gotten the threat realized, that the bark and bite has come to realization?
Yeah, exactly. China's response to the first 10% tariffs that we saw imposed a month ago was a fairly measured one. They seem like they're kind of keeping their powder dry. Going into this big national political meeting this week, you could expect that they would retaliate against the next 10% tariff that Trump has threatened immediately. By Tuesday morning, they will have announced some large multi-billion-dollar figure of U.S. exports to China that they will hit. That we'll have to wait and see what the package of that retaliation is. But you could imagine them going after U.S. agriculture exports. Kind of the heart of Trump's core of support in farm country, just as farmers are trying to figure out what they're going to plant this year going into spring, they might have the prospect of tariffs on their exports put in place. So it's a chess game that we're going to see play out through the day and the weeks ahead. But it seems like markets are playing it, being sort of reserved and casting judgment on which direction it's going to go in so far.
Waiting to see the white of the tariff's eyes before casting judgment. Brendan, thank you so much. Bloomberg's Brendan Murray. Let's get you some other stories that are trending on the terminal this morning. I mentioned this. Investors are watching for announcements on more stimulus from China's economy. The annual meeting of the National People's Congress kicks off on Tuesday. The challenge, ramping up the government's investment and encouraging businesses and consumers to spend to offset the impact of U.S. tariffs.
Prada is moving closer to a deal to buy Versace from Capri Holdings. That's according to sources. They could finalize a deal this month after agreeing to a price of nearly $1.6 billion. Capri, which bought Versace in 2018 for about 1.8 billion euros, didn't immediately respond to requests for comment on Sunday. Prada also declined to comment.
And cryptocurrencies open March with a rally, recouping some of their losses from what was their worst month since 2022 in January. President Trump posted about plans for a strategic crypto reserve, a sign of loyalty to an industry that donated heavily to his presidential campaign. Still, many of Trump's plans are unknown, including how much crypto the government will actually buy.
Coming up in the show, we catch up with Peter Kinsella on the reversal in the Trump trade. That's next on Bloomberg. It's Bloomberg Brief. I'm Manus Cranny alongside Danny Berger in New York. We're counting down to Tariff Tuesday, that 25% tariff on all of the imports from Canada and Mexico hitting China, twice with an additional 10%. Peter Kinsella of Union Bancaire Privée thinks that the worst-case scenarios are now less likely than before. Writing this, investors can be forgiven for feeling exhausted with these developments. However, it is important to focus on outcomes rather than the process. And in a sense, Trump can be described as having high implied but low realized volatility. Peter, good morning to you. We'll talk about Europe in just a moment, but the risk is lower realized volatility and a compromise. Is that the base case that you're extrapolating at the moment over this week?
Good morning, Manus. It is, yeah. I mean, look, what we've seen since Trump came into office in mid-January, tariffs are on, tariffs are off. We see a lot of sort of a lot more heat than light. And if you simply look at implied volatility, it really comes off any time sort of we get any sort of event from Trump. And in a sense, really, it's become, I would say, difficult, if not impossible, to trade the tariff story, right? Because we have Trump saying one thing, the Treasury saying another, and the end result really is that we've actually seen very well-behaved currencies. They've not been doing an awful lot. Dollar CNY is pretty much where it is today where it was in early Jan, and same story for dollar CAD. So it does appear as though sort of Trump is really high implied but low realized vol.
It's not moving to that, Peter, and good morning to you. Great to see you. It's not moving that. And then also the euro seems to not be budging on German news on just how much they might spend on defense. George Servalis over at Deutsche Bank notes that it might be as much as they invested in East Germany since reunification. Why isn't that moving the needle at all for euro dollar?
Right. I think it's a very good point, Danny, and I firmly expect that long-end German yields will rise pretty materially in the coming months and quarters. And I think once that really starts to manifest itself, you're then going to see the euro sort of catching a bid. What we've seen in just in recent days, obviously the election last week with Germany, they're going to move towards a removal of the debt brake. We now have two huge fiscal events, right? With first, obviously, is what we're going to have to see on defence, not just in Germany, but across all of Europe. And the second one, of course, is further investment to improve German infrastructure. So that's going to have a very material effect at the long end of the curve. The last time we saw this was as Mr. Servalis mentioned, was in the early 1990s with German reunification. And at the time, that was a highly disruptive event for bond markets. Remember, we've not seen this scale of German issuance for a very, very long time. And it's my view that it will be a bit of a game changer from a yield perspective. Likewise, I would expect euro to catch a bid as and when that transpires.
Euro dollar up 0.6% at the moment, 104.41. One of the best lines I read this weekend was from Jordan Rochester, which is that Europe faces a mega moment. In many ways, this plays to what Danny has just said in terms of the context, the fiscal stimulus, the size of the defense budgets maybe to come. They're going to have a mega moment rather than a MAGA moment, and that mega moment will relegate the parity call.
Oh, for sure. Yeah. I mean, I've never really been a big believer in the parity call, mainly speaking because the Eurozone's current account is back in a very, very large surplus. And if anything, the prospect of a ceasefire in Ukraine does imply we'll have lower gas prices. So, I've not really been a big believer in parity from the get-go. But I definitely agree with the sentiment. We're going to begin to see very quickly a lot of the Wall Street banks changing their forecasts on euro because the conditions for a material downside in euro dollar are rapidly dissipating. And really, you're going to see that in the coming weeks.
Peter, you've been spot on with that call to avoid the euro parity call when so many other people had it to start the year. You also have raised your price target, you and the team on gold. You now see it at 3,300 by the year end. Why can the rally continue?
Well, look, I think what you saw on Friday night is the perfect example of why it could continue. We're seeing a geopolitical fragmentation. You're seeing ongoing, massive physical purchases by central banks, large investor interest and increasing retail interest. So in a sense, really, there are periods in which gold does very well. And we're moving towards an environment of pretty high, I would say, nominal GDP growth in the States and for sure in Europe in the coming years. And that's consistent with, with gold outperformance. Not to mention, what will be a very strained geopolitical environment. So I think it's a no-brainer for me to remain long gold and indeed to see it trading at materially higher levels in the coming years.
Do we build up momentum to short the dollar? And I ask that because the hedge fund managers, the asset managers, they've been sort of dropping off for the past 6 weeks. What is it that accelerates that perhaps sell-off in the dollar?
I would say two things. One, either a policy move from the U.S. Treasury. People are talking about a so-called Mar-a-Lago Accord. I'm somewhat skeptical about that, to be perfectly honest with you, Manus, from a liquidity perspective, and likewise in terms of getting the Europeans and the Chinese to agree to it. But I think as well, if we just look at U.S. data, we're starting to see mixed signals on the data side. And so I think I would struggle to say we have massive momentum in selling the dollar. Again, the cost of carry is pretty high, but at a minimum, further material appreciation from current levels, I think, is unlikely.
Peter, so wonderful to see you this morning. Enjoy the rest of your week. Peter Kinsella of Union Bancaire Privé. Coming up, it was a big night for independent film. The Oscars celebrates the best in filmmaking with budgets big and small. We're going to bring you what is on your front pages, including the Oscars, coming up next. Let's take a look at what's on the front pages this morning. First up, the Bloomberg has this, that Israel has halted all humanitarian aid and imports to the Gaza Strip. Egypt, Qatar, Saudi Arabia, all arguing that aid should not be used as a weapon, criticizing the move. Hamas had also rejected a U.S. proposal to extend the ceasefire.
Next up, New York Times, Danny, here we've got the former governor, Andrew Cuomo, announcing he is running for New York City mayor. Now, his entrance into the race was met with immediate blowback, especially by women's rights organizations. New York Mayor Eric Adams says he welcomes the competition. Bring it on.
And finally, on the Wall Street Journal, leading with the independent film Anora, taking home Best Picture at the Oscars last night. It's a movie about a sex worker who marries the son of a Russian oligarch, so definitely a different type of plot for the Oscars. It is the first independent film, Manis, to ever win the top prize. Had a budget of just $6 million, so there you go. You don't need to spend multiples of that in order to win the Oscars.
No, I mean, you might have spent it on Dune, you might have spent it on Wicked, but I was just looking at what they took. They took $40 million globally, so it just shows you small budget, big impact, and probably more to come. And those blockbusters, Dune and what was it, Wicked, they didn't really take anything. Well, they took home some technical words. Let's not be disingenuous.
I'm looking forward to now the cast of Wicked no longer having to dress up for every single ceremony and public event that they go to, a la the cast. So that's what I'm most looking forward to. Back to normal fashion.
I've still not been to Wicked.
Oh, really?
I walked past the theatre the other day. Haven't seen the movie, haven't seen the show. Maybe that's our day out.
I think we can stream it at this point. It's been so long. We can figure it out. Anyway, coming up, we're going to catch up with Katrina Dudley of Franklin Templeton. That's up next. From our global headquarters in New York City, welcome to Bloomberg Brief. Danny Berger alongside Manis Cranny. Let's set your agenda.
Coalition of the Willing, Europe races to secure Ukraine and get President Zelensky back to the negotiation table. The Kremlin responds to the Oval Office breakdown, calling it unprecedented, showing how hard a settlement in Ukraine will be. And countdown to Tariff Tuesday. President Trump's levies on Canada, Mexico and China are set to roll into effect. Danny, good morning. Good to be back.
Good to have you back, Manis. You missed quite the week where we did end up lower for the week, even though the S&P ended up higher. We tried to add some weight to that this morning. We're still below 6,000, up about 1/3% for both S&P and NASDAQ. Russell 2000, that outperforms. A lot on the agenda for you. Canada, Mexico, China tariffs come tomorrow. Jobs Friday, a Powell speech on Friday, ECB on Thursday. Bitcoin heads lower this morning, 2.4%, still above 91,000 after that tweet from Donald Trump about a strategic Bitcoin reserve, a truth post, I should say. When it comes to yields, again, we have, for the most part, the direction has been lower. We changed that this morning. Your 2-year yield and 10-year yield head higher by more than 3 basis points. We stand at 4.24% on your 10-year yield, Manis.
Indeed, and that's down 33 basis points in the month of February. So you've had a flying start to bonds. Suddenly, the 60-40 portfolio actually looks like a little bit of an appealing one, doesn't it? Even though, Mag 7, I was away for 5 days, and you corrected in the Mag. You did a lot last week. The Mag 7 corrected, and you wiped out 2025's S&P
gains. To be clear,
gains.
I didn't do it. I don't want anything bad to happen to equity markets. That is not my aim. I know it's painful for many people.
It is.
But to your point about Treasury, Scott Bessent was on CBS Face the Nation over the weekend, talking about falling U.S. home mortgage rates, talking about a drop in the 10-year yield, saying that is the thing that he is focused on. And it is an aim that the White House has accomplished, with maybe emboldens Trump tomorrow to really put those tariffs on. And then we begin to debate, well, what is the Trump put? Is it a drop in equity? We're 1% above where we were on November the 5th, 1% away from the November the 5th close. But is it the 10-year yield
Or is it a drop in the equity market that's going to be much more important to Donald Trump, the Trump put?
Here, opinions differ wildly. Michael Hartnett of Bank of America talking about his latest note that it looks something like 57,000. Mike Wilson saying this is not a White House who has been talking about this equity market. There has been somewhat of a soft patch in the data, though, but depending on who you listen to, the extent of that soft patch differs. The Atlanta Fed coming out with their latest now GDP forecaster. You can look all the way over the right hand of your screen. That is an estimated contraction of 1.5%. You go over to the New York Fed-based model, though, their model-based estimate, theirs is something closer to 3%. Joining us now, trying to make sense of it, is Katrina Dudley, Senior Investment Strategist at Franklin Templeton. Katrina, is this a growth scare? Is this a soft patch? Or is it just 1 month and the data is distorted?
I think that the consensus is now coming to the fact that it is 1 month data distorted. Have a think about it. If I told you that the prices of goods are going up on Tuesday and you had that information, you would start stockpiling some of those goods if you can, if the supply is available. So it's actually very rational economic thinking. I think the big difference versus prior times is that the cost of money this time isn't free. So you can't stockpile to the same extent that we may have had in the past. But there's a certain amount of stockpiling here that makes sense. So we're in the camp, it's a little more of a data distortion.
Just going back to Scott Bessent's interview yesterday, he talked about a myriad of different things, but he talked about mortgage rates coming down every week since the president's been in power, 10-year yields coming down, and you sat down in the chair. Here we are with an equity market, which is just above where we were, let's say, in November the 5th, and we've got a bond market where yields are dropping. What do you think is more important? What is the more prescient issue for the Trump put?
I think the administration is focused on the equity market in particular. They do need to pay attention, however, to the bond market because we've been talking about this deficit and the deficit is getting wider and obviously we need to fund it. So I don't think it's the same administration that we had in the prior Trump years in terms of just equity, equity, equity. I do think that the bond market comes into play here. But you talk about mortgage rates and everyone seems to think that the mortgage rate dropping drives the decision to purchase. And it does. It's not the only factor. It's the birth rate. And why? Because people have, expanding families for various reasons, and you need bigger places, and that's what I keep hearing from a lot of the younger people that we speak to and interview. And the second thing is it's sentiment around your job. And so they're the two things. I think the mortgage rate, yes, it does factor in there in terms of the affordability of the house. But what I think that actually drives is the size of the house you can purchase and the area that you can purchase in, not so much the actual intention to purchase.
In regards to the job market, there has been some policy announcements that have had ruptures. I mean, very localized, kind of DC area for the moment. But it's along that with market unfriendly policies to start with the Trump administration to get tariffs, immigration policies, not necessarily deregulation, and market-friendly tax cuts. You say that it's just been 1 month of data, but is there anything coming from the White House that is behind some of the sentiment shift that could have uglier ramifications?
Look, it's always good to get the bad news out of the way first. Okay, so let's just think about it. We're only in week 7, and he's done a lot of bad news things, and he's done it really early in the sentiment. And the fact is we have really short-term memories. So there's a lot of good news to come. Stop laughing.
I definitely have a short-term memory. Go on.
I know, but there is a lot of good news to come, in terms of the tax rate reductions. That was actually the narrative going into November. It was this very positive message, and we weren't as focused on the negative. Now we're seeing all these negative things happen, and we're focusing on that. But the positive is that the tax cuts are on their way. And I do think that, yes, there's some adjustments in pockets of the labor market, but the one thing is that we do have mobility of labor in this economy. That is one area I have to say that the mortgage rate does factor in, because to the extent we're much closer where people locked in their rates to where they can relock them in, you will have some job market mobility.
Well, then compound that into taking risk. One of the best lines I read over the weekend was the biggest mistake of 2024 was perhaps being just a little bit too cautious, and so I missed some of the upside. Is that the risk, that one is too cautious for this year? As you say, we've had a lot, and it's been reasonably well absorbed.
Look, how much more cautious can the market get? If you look at the fear and greed index, we're right in that red zone that kind of flashes and says caution, caution, caution. So that's the first data point. The second thing is if you look at expectations, so consumer expectations for inflation, everyone is actually expecting a lot more inflation. That comes down to the tariff narrative, the negative headlines. And so everyone in the market, as much as we can see, is cautious. You've seen it in terms of the reallocation from the equity market into the bond market. Now, I want to be very careful to say, just because everyone is cautious, it's not always a buy signal per se. But in this case, given we've talked about some really positive news on the horizon, I think it is an opportunity here.
Well, there's the rotation from equity to bond, but also just within the equity market, away from tech, the worst month for Mag 7 since December of 2022. The defensive stocks get a bid. Does that rotation continue, or does tech leadership reemerge?
I think, we've talked about it, the Mag 7 is becoming the lag, LAG 7. We've spoken for some period of time about the need to have breadth in this market. If I take a look at the earnings data that we have, 75% of the S&P beat expectations by at least 7%. That's really positive in terms of the narrative on a very broad brush basis. If we look at our 2-year forward earnings expectations, we're expecting growth across all segments of the market. So we think that this breadth argument is likely to continue. The hard thing for the market to digest is that you could have, a lot of growth in the breadth and a lot of performance in the bottom part of the market, those 400 plus stocks that don't constitute the big market cap names. You may see some weakness there. So the actual overall index may not perform as well, even though generally most of your diversified investors are going to be seeing good returns.
Katrina, words of wisdom there to set the agenda this Monday morning. That's Katrina Dudley there of Franklin Templeton. Other stories trending on your Bloomberg terminal this Monday morning. This is what we got for you. Investors are watching announcements for more stimulus from China. The annual meeting of the National People's Congress kicks off Tuesday. The challenge? Ramping up the government's investment and encouraging businesses and consumers to spend to offset the impact of U.S. tariffs.
Prada moving closer to a deal to buy Versace from Capri Holdings. According to sources, they could finalize a deal this month after agreeing to a price of nearly $1.6 billion. Capri, which bought Versace in 2018 for about 1.8 billion euros, did not immediately respond to requests for comments. Prada also declined to comment.
Cryptocurrencies opening March with a bang, recouping some of the losses from their worst month since 2022. President Trump again talked up his plans for a strategic crypto reserve. It's another sign of loyalty to the industry and donated heavily to his presidential campaign. So many of Trump's plans are unknown, including how much crypto the government would actually buy. Coming up on the show, Europe mobilizes around Ukraine. We bring you the very latest. Context Matters on Bloomberg.
I think the transatlantic alliance is shifting. Instead of complaining about it, you have to analyze it and draw your conclusions. Now, my conclusion is that when it comes to multilateral institutions, such as the UN or the WTO or the ICC, that's where we don't see American-European engagement together. I think the vote in the UN this week was an example of that.
The Finnish president there speaking to Bloomberg in London yesterday. European leaders are rallying around Ukraine and fast-tracking efforts to improve their own defense capabilities. The clash between Trump and Zelenskiy on Friday raised the possibility of the U.S. walking away from a minerals deal with the Ukraine. Joining us now is Bloomberg's Oliver Crook. Oliver, a lot has happened since Friday. Starmer gathered together, Keir Starmer, the Prime Minister in the UK, a coalition of the willing, where he called it a once-in-a-generation moment. What was agreed? What was the scale of the commitment of those people that gathered in London yesterday around Zelensky?
Well, that's the issue, Menace, is that scale has not yet been determined, and coalition of the willing, but willing to do what exactly? That is still, I think, an open question for many of these European leaders who are still trying to appraise the sort of full scope of what happened on Friday and sort of transition this idea of the abandonment of Europe by America in theory into real practice and what that means. What that means, we already know, is huge volumes of money. That means new mechanisms of funding for defense build-out, potentially. We know that at the EU level, they're looking at different options, from sort of expanding the mandate of the European Investment Bank to potentially repurposing funds from other European programs. And of course, the sort of holy grail in there, the question of sort of joint debt in the name of defense potentially, or other sort of workarounds that work around that. But there's also this question of architecture of defense and also security guarantees. If the United States is unwilling to give security guarantees right now, what can Europe put forward? This is sort of what Keir Starmer has put forward. Macron has talked about boots on the ground in the past. But every single leader that I have spoken to and lawmakers that I've spoken to in Germany, they're very reticent to sign on to anything that would involve, their own troops, even after a sort of ceasefire or peace deal, because the question is, what are those troops there to do? Are they just sort of there to observe the conditions are being of a ceasefire are being respected? And if there are starting the ceasefire to end, if there are sort of fire, they're firing back at Russian troops, is that something that European leaders are willing to put their neck out on the line? I think that fundamentally this still comes down to potentially they would be if there are American security guarantees, and that is really what the Trump administration so far has been unwilling to put forward to the Europeans. And this is, of course, the sort of exact sort of center of that blow-up we saw in the Oval Office on Friday.
Oliver, away from what the spending agreement might be as Europe as a whole, where you are usually based in Germany, the reports are huge levels of spending, something like 400 billion euros for defense, up to 500 billion for infrastructure. George Velos at Deutsche Bank talking about this being levels we haven't seen until since the reunification of Germany. Oliver, what kind of sea change are we talking about that's already underway for Germany and Europe as a whole?
Listen, these are still sort of reports in the sort of said-to state of things. It's what we're hearing from a number of people that are sort of talking about the architecture of the next German government. Remember, we only have a caretaker government right now in Germany, but we do know we have the conservative coming in, Friedrich Merz. We know that his position has been much more hawkish as it comes to European defense and supporting Ukraine. And I think that there is this awakening that is happening within Germany that this is just not going to cut it anymore. You're going to have to talk about the debt brake. Maybe not reforming the debt brake, but setting up these special funds. These are funds that are off budget in order to build out military and defense. We're talking now, Danny, potentially the order of hundreds of billions of euros that the Germans are looking at right now. The first time they set up such a fund was in the initial invasion of Ukraine. It was 100 billion euros. But I spoke to the top general in the German military a couple of weeks ago, and he said that basically that 100 billion only started to begin to fill in some of the potholes that the German military had. This is a nation, though it is the biggest in Europe, that has chronically underinvested, as with the rest of Europe. And again, we go back to that conversation that I had with the Norwegian prime minister that shares a border with Russia. They're only going to hit 2.16% of their GDP on defense spend. So again, there is this idea that, they need to move out of the rhetoric and into the reality. We're starting to see it a bit with the Germans. And if the Germans unlock that, I think it could really go a very long distance. The question is, will they be able to do something at the EU level? That still needs to be discussed.
Oliver, thank you so much for leading our coverage for this. That is Bloomberg's Oliver Crook in London. The Washington Post reporting this morning that the Kremlin says that the U.S. is aligned with Russia's vision. The president appears closer to siding with Russia than Ukraine, but the noises from Congress are perhaps different.
I think Vladimir Putin is an old-school communist, a former KGB agent. He's not to be trusted, and he is dangerous. The way I view this is that China, Russia, Iran, and North Korea are engaged in a new Axis powers, and they are not on America's side. Let's be crystal clear about that.
Let's bring in Bloomberg government reporter Kate Ackley in Washington, D.C. Kate, we just heard from Oliver Crook there on what the Europeans are doing, trying to come together. Is there any sense that Trump might revisit this, or a broader support from Washington on Ukraine, or has the ship sailed?
Well, I think your comments there that you just played from Speaker Johnson show that there is still some support for the Ukraine perspective in this conflict, on Capitol Hill. This is going to be a really pivotal week on Capitol Hill for this issue and for the Trump agenda generally. President Trump will be going up to Capitol Hill on Tuesday for a joint address of Congress. This is sort of like a State of the Union, although it's not called that because it's his first year, in the first month really into his second term here. So we'll see him lay out, a broad vision. Republicans tend to be very deferential to President Trump. I think the response on Capitol Hill will really depend on who you talk to. We saw Lindsey Graham, Senator Lindsey Graham, a Republican senator who's been quite supportive of Ukraine, come out Friday after that dramatic interaction in the Oval Office that we saw with Trump and Zelensky and J.D. Vance, the vice president. And we saw Lindsey Graham criticize Zelensky and really sort of take Trump and Vance's side.
Yeah, and over the weekend, he said, he called it a complete and utter disaster, and he said he should resign, appoint somebody else. But let's talk about perhaps the way back to a rapprochement. Zelensky, over the weekend, expressing gratitude to the U.S. And thanking Trump, something which was a sore point on Friday. What is the political will for the U.S. to re-engage? Keir Starmer calls them a very firm ally, the United States of America, fully engaged.
Well, before that Oval Office address or press conference or whatever meeting, whatever you call it, Zelensky had been on Capitol Hill and had a quite warm reception with senators. I think there is still a lot of support in, conversations with lawmakers and staff on Capitol Hill. Zelensky did signal over the weekend that he would be ready to sign the minerals deal, maybe do a little bit of a do-over or get back into the finding a peace deal. So I think, certainly it's possible, but that was quite a dramatic moment, and it did signal this shift that has come with the Trump administration's approach to foreign policy and a number of things.
Kate, just quickly, before we let you go, Tuesday, we get the 25% tariffs, Canada, Mexico, an additional 10 from China. Any signs that they may or may not go on?
Well, it's supposed to happen Tuesday. And again, that's the date of the big address where President Trump will go to Capitol Hill. There are, reports that maybe it won't be the 25%, that it will be something smaller, that this is continuing to be a negotiating tactic. But, we're here with about, little more than 24 hours before that address, and some of those details might take place. I know folks in the business sector are awaiting those details. The number will be very, the devil will be in the details, if you will, on whether it's 25% or not. And, this has the potential to really remake these relationships with our trading partners, U.S. trading partners. So a lot of eyes will be watching how this comes out.
Yeah, I think Howard Lutnick, the Commerce Secretary, described it as a fluid situation. Let's see what fluidity brings. Kate, thank you very much. Kate Ackley there of Bloomberg Government. Coming up in the show, we'll set you up for the week ahead. The proposed tariffs, they take effect. Will they? President Trump speaks to Congress. The jobs report, all on the slate, right here on Bloomberg Brief.
Let's get you set up for this very busy trading week. Proposed tariffs on Canada, Mexico, additional ones to China are due to take effect tomorrow on Tuesday. On Tuesday, we're also going to get President Trump delivering a speech to a joint session of Congress. We're going to wrap up the week with U.S. jobs report on Friday. We will also hear from Chair Powell on Friday, too. Manis.
A heck of a lot to absorb, Danny. Some individual names. Capri Holding rising as they come closer to a deal with Prada. That's to buy Versace. People familiar with the matter say that they've agreed a price of $1.6 billion to do the deal. MicroStrategy, lovely boost on the whole crypto world yesterday as President Donald Trump once again talking about his plan for a strategic crypto reserve. And Chipotle, you've got Morgan Stanley upgrading the stock to overweight. Analysts say the stock's weakness is a buying opportunity and an excellent tech play.
Now I'm hungry, and it's 6 a.m. in the morning. Anyway, man, it's just a quick look at your global bond market. Seems to be led by Germany in terms of a sell-off. Producer Valerie Teitel writing in to note that German long ends are falling out of bed. They're up nearly 9 basis points, the amount that Germany plans to spend, according to reports on both defense and infrastructure, Manis, would look something closer to the post-World War II reunification of Germany. We are talking about a big fiscal shift, and it is causing bonds to sell off. off this morning.
Yeah, 200 billion euros, 2% of GDP. You've also got CPI coming out in Germany as well at plus 0.5%. So that's way over what they estimated. So that just adds fuel to the fire. It's going to come down to what the fluidity is on these tariffs. When we walk in and we close out business tomorrow, what have we got? Is it 25% on Mexico and Canada? Will Mexico and Canada come on side with the United States of America, as Scott Besson kind of floated over the weekend?
And when will risk actually respond? We rallied by more than 1.5% on Friday. We're heading higher of futures this morning. There's a lot of people in this market who don't believe that the tariffs will actually happen. We'll see if any negotiations take place beforehand. All right, that's it for your brief. Surveillance will take the reins from here.